Hey guys, so it's clear we're in an uncertain market right now. I've made that clear over numerous videos. You guys can see that from the way stock market is reacting, Bitcoin is reacting, how the treasury yields are reacting, the Evergrande crisis, the backdrop of the US debt ceiling. We got the FOMC meeting tomorrow. A lot is going on, and that is resulting in the VIX, the volatility index, spiking. Now, if you haven't watched my previous video yesterday where I showed you how to react and what to plan for in an uncertain market and how to navigate through it, click here. I will link that up somewhere here. But today, now, I'm going to show you the top 4 picks I'm looking at to start buying the dip on. Let's take a look. So, the first one I want to share is Enphase. So the first stock I want to be buying the dip on is Enphase. Now, my cost basis for Enphase is sitting at about $140. I've got a good size and good portion of my portfolio in Enphase. It's done really well for me. And it's ticked back down now, which is good. We saw the highs of around 222, and I wasn't scared averaging up. I did quite well on Enphase in that I wasn't scared averaging up, even though the price is getting higher. And that's one of the things I need to work on personally, is when I get a good entry price, I often, and in this case, I started buying Enphase before 140. When I was buying on this trend here around 100, it was easy for me to go, no, it's running away from me now, I don't want to purchase. But because I believe in Enphase, I did average up. And now my cost basis is sitting at about 140, which puts you about here. And that's where my cost basis is. But I want to be nibbling in a bit more. And I'm ready to start nibbling a little bit now. But if we see the 140 mark, I'll go in a little bit heavier. And if we hit 130, 120, I'm going to love that to bring my average down. I'm going to go in much harder on Enphase. Now, we've seen Enphase. I don't need to spend loads of time on the fundamentals of these stocks. If you want a deeper dive in any of these, comment below. But in essence, they've got strong growth rates. We've seen their margin grow from 30% to 40% in just 2 years. To put that into perspective, First Solar and SunPower operate in about the 20% margin range. So Enphase are killing it there. They've got a differentiated product. Their microinverters are great. And I think given the favorable regulatory environment with Biden and this whole push for environmentally friendly products and renewable energy, I think Enphase is best positioned to go on a tear. And we've already had highs of 220. I can see us getting to that and eclipsing. So Enphase is definitely one which I want to be topping up on. Next up, we've got Lemonade. This is a risky one, guys. This is a small company, and my cost basis of a Lemonade is about 70. I always like this around the 70 mark, and I don't have a massive portion of my portfolio in Lemonade. This is a low risk one, and I highly recommend you don't play too much with this piece of fire. It's a high risk, high reward play. It should be a tiny percent of your portfolio, but I really do believe in this as a product, from a product perspective. Now, my cost base is sitting at about 70, like I said. We've seen this kind of support level here at 58. Could we get back down to that level? I mean, we've got this low here at 67. I'm happy with my cost basis at 70. If we see 60, I'll start buying some more. So we're sitting at 68 right now. If we see the low 60s, I'll start buying. If it goes lower than 60, I'm definitely in, because, you know, we saw this pump here after it had some positive press. But Lemonade has a long way to go. They've got explosive growth. We've seen a good growth in Lemonade. They've got a lot of cash on their balance sheet, 597 million of cash, and they can increase their product ranges. And this is what's key. They started off with the mundane products like renter's insurance. They've introduced pet insurance recently, and we know that car insurance is around the corner. And this is going to be a game changer for Lemonade. And the reason I like Lemonade is just from a usage point of view, just from a customer experience point of view. I know from here in the UK and US, the insurance industry is really archaic and ancient in the way it works. It's not customer experience driven, and that's why Lemonade can really be a good disruptor in this space. Given the archaic nature of it. You know, if you have a car accident or you want to claim on insurance, it's such a headache. File this paperwork, go through weeks and months of arguing, and even then they won't pay you out. And I think Lemonade's approach of solving this with AI, with minimal human intervention, I think is a game changer. The fact that you can get insurance in minutes and you can get claims in 10, 15 minutes. I believe 80% of their claims are now, dealt with by the AI bot. It doesn't even get escalated to humans. That's going to be fantastic for their gross margins. They'll be able to just scale without the cost, because all the cost is in the AI, and the IP is already sunk into it as sunk cost, right? So the growth, as users come in incrementally, you should see them achieving economies of scale. So definitely one that I want to be topping up, but I want it around 60. I'm not going to get in now. I'm happy with my cost base at about 70. It's not juicy enough for me just yet. Next up, what do we have? we have Square. And Square has been on an absolute tear, guys. Look at this on the daily chart. It's just gone. And again, I've done pretty well with Square. My cost basis is sitting at, what's my cost basis at 220-ish for Square, which puts me about here. And again, this was another one where I continued to chase it. I kept buying. And I'm happy that I did that, because there's a lot of stocks where I've not done that and I've regretted it. You know, where I get emotional with my cost basis and I'm like, oh, I don't want to buy anymore. I've done well. I've done okay with Square in that I'm not scared of seeing a high cost basis. If I believe in this stock long term and I believe it's gonna, and that's the game. I'm not playing this. I don't want to be in at 220 and out at 250. I want to be in at 220 and this go to $1,000 per share, right? Over the 3, 4, 5, 6 years you're investing in these stocks, because these are the players that I believe are going to be around in that period of time. I don't see anyone dethroning Square. It's a hot space and they're only going to go from strength to strength. I mean, you look at their growth, it's phenomenal. In 2020, they grew 101%. In Q1 2021, 266% versus Q1 the year before. Q2 was up 143% versus Q2 the year before. Gross profit is going through the roof. They're improving their gross profit. Cash App is a hidden gem in Square. I mean, the user base has gone from 36 million to 40 million, and revenue's grown 440% in just Cash App. So it's an absolute no-brainer. Hot space. They've got some Bitcoin exposure in there. We know they bought Afterpay, so they've got buy now, pay later involved in that as well. It's a really great ecosystem of financial products, Square, and if you're not sure where to start with individual companies, Square is definitely a great one. It's been on the tear. It's kind of gone a bit sideways here since this run-up. Obviously, it needed to cool off a little bit, and I wouldn't be surprised if we're ready for our next leg up. I mean, they continue to innovate. They've got Jack Dorsey knows what he's doing, and this is a great platform. So Square is something I definitely want to be nibbling at. Bit expensive at the moment. It's at 250. Again, I know my cost base is 220. If I can get to 220, I'm buying, although I might start nibbling at 230 if we get to 230. Having said that, EMA ribbon is sitting, there you go. EMA ribbon is sitting at 230. So my gut feel of having it at about 230 probably sounds right. If it dips down here and creates this higher low from here, I probably want to be buying in at this point for Square. Okay, so now the last one, the last but not least, we have Roku. So Roku, I know this has fallen out of favor with a lot of people, but I've not given up on Roku just yet. And this is one where I've got a little bit of a high cost basis at 340. So I'm in the red a little bit on Roku. I'm sat at, but not massively, I'm sat at about here where my cursor is. So you can see that's where I'm sat. I've got this little bit of loss down here, although I can see us bouncing off and heading back higher. Roku's naturally suffered with the emergence from COVID. They obviously did really well in the COVID period. But I can see them going from strength to strength. You've got to remember, it wasn't long ago we were at highs of 489 on Roku. So we're well off our 50-week highs. And definitely Roku has a lot of potential going forward. And for me, a lot of people say, Roku versus Netflix. That's not the game here. Roku, for me, is a bet on traditional TV versus online streaming. And for me, that battle is only going one way. So Roku's clearly positioned in a great place that when people start turning off their, because, if we're technically switched on, we know that, everybody's using streaming already because our networks use streaming, everybody's using streaming. But the reality is there's a massive community of people untapped across the world globally that are still using traditional satellite and cable TV. And that's where Roku's work is not finished. And Roku are best positioned to really capitalize on that. At the moment, the majority of their revenue is coming from US and Canada. They want to expand to Germany. They're already operating in 20 other countries. And they've only just planted the seed in international markets. So they've also just started with creating some of their own original content, which we've seen has done great for Amazon and Netflix. Can that be another revenue stream for them? Definitely a play which has a small position in my portfolio, but has one nonetheless. And I can see upside for Roku from this point. Where do I want to enter in at? For me, we're sitting at 316 now. For me, I'd want that to kind of come back down to 305-ish. I'm happy at 305 to 310. Although we may never see that. We may bounce back off from these kind of levels. We may bounce a little bit earlier. But this sort of resistance here, sitting at 295, will we see that kind of a level? I'll start nibbling. Although I've started nibbling already. Because it's already below my cost basis. I'm happy to start nibbling already. Ready for an uplift. But yeah, a lot of people are kind of going against Roku right now. It's an interesting one, and definitely one which I'm not averse to adding a little bit more on. So there we have it. There's my update. The 4 stocks which I'm looking to add some more shares and buy the dip on. For me, just to recap, we've got Lemonade, we've got Enphase. So Lemonade, great insurance play, small company, small position in my portfolio, but I want some more. Enphase, this is a core of my portfolio, a big part of my portfolio, and I want some more in it. I think it's here to stay. Great product, great vertical in terms of renewable energy. Great space to be in given the regulatory environment, and I want me some more Enphase. Then you want Square. For me, Square, it's done me really well in my portfolio, but I want me some more Square. So for me, I want to be getting a bigger position in Square. It's only going one way. I've spoke about it. Cash App, revenue growth, the buy now, pay later space. Square and even PayPal are moving this space forward. And for me, PayPal is not one I've managed to get into, but I do want to get into PayPal as well. And then finally, obviously, is Roku. So Roku is a bit of the red herring, but I still believe in Roku. I see it as a bet against the traditional TV cable space. I can only see it going one way. Everybody using HBO Max, everybody using Disney Plus, and Roku's best positioned with the hardware to have that pre-installed. So can't bet against Roku. So there you go, guys. I made the video about how to address this type of uncertain market. If you still haven't watched that, please do click here. And, it's important that you watch that, you understand how to navigate this, and then start to put the price targets for your favorite stocks. So I made it clear for me here which ones I'm looking at over the next few days if we see a dip. If we don't see a dip, I'm perfectly fine. We carry on going up. I'm not going to be chasing any of these stocks, right? If we get a dip, it's a flash sale. I'll get me some more on my high conviction plays. If we don't, it's not a problem, and we'll keep it marching on. So there you go, guys. Hope you found that useful. If you like this type of video, please hit the like button and subscribe. It gives me an idea of what type of content you guys like between all the different types of content I'm posting, and we will see you in the next one.